You've been asking about variable index annuities,
Hmm.
or VIAs for short,
Right.
and how they can help you,
Mm.
navigate these choppy market waters we've been having,
Absolutely.
but still kind of capitalize on any of that growth that's out there.
Yeah.
So that's what we're diving into today.
It's a great topic.
Yeah.
And I think one that a lot of investors are really curious about these days.
Yeah.
Especially as they're,
Yeah.
looking for alternatives to
Yeah.
just the traditional
Yeah.
fixed or variable annuities.
Exactly. It's like trying to find that balance,
Yeah.
You want the stability
Right.
and the predictability
Sure.
of having something like a fixed annuity,
Mm-hmm.
but you also don't want to completely miss out
Right.
on the potential for growth
Of course.
that comes with being in the market.
Yeah. Big
So,
question is,
yeah, the big question is, are VIAs the answer?
yeah, that's the million-dollar question, right?
Yeah.
VIAs really try to bridge that gap.
Okay.
They offer a really unique approach, I
Okay.
think,
Okay.
that combines features of both fixed and variable annuities.
Okay.
And so you can almost think of it as like a more customized
Yeah.
investment strategy
Okay.
that lets you participate in some of that upside market potential,
Yeah.
but still gives you a little bit of that downside protection as well.
Okay. So that's what.
And that could be really appealing to a lot of folks.
Yeah. That's what I find so fascinating about these VIAs.
Yeah.
Is that they're addressing that fear of market volatility.
Yeah.
Especially as people are...
Especially as you get closer to retirement.
Yeah, exactly. As you're getting closer to retirement and you're thinking about, I'm going to need to tap into these funds
Exactly.
relatively soon.
Sure.
But how does that work?
Yeah.
How does that work? It
Yeah.
sounds almost too good to be true.
Yeah. Let's unpack it a little bit. So with a VIA,
Yeah.
essentially your returns are linked to the performance of a specific market index.
Okay.
So think, the S&P 500.
Right.
Or something along those lines.
Okay.
So you're not directly investing in the stock market,
Okay.
but you're tracking its performance.
Okay. So I'm not picking individual stocks.
Exactly.
But my investment is still influenced by
Right.
how the overall market performs.
That's exactly it.
Okay.
But here's where that too good to be true kind of comes in.
Yep.
The built-in protection.
Okay.
Unlike a traditional variable annuity
Right.
where
Sure.
your investment can lose value.
Right.
If the market declines,
Of course.
VIAs have these features built in
Okay.
that actually buffer against some of those losses.
So there's a limit to how much I can lose,
That's the idea.
even if the market just takes a complete nosedive.
Yeah, that's the general idea.
Okay.
Now,
Okay.
it's not as simple as saying you're completely protected from every loss.
Sure.
Right? The specifics of how much protection you have
Yeah.
really depend on the structure of the VIA
Okay.
and the specific features that you choose.
Okay.
Which-
So this is where it gets...
This is where it gets really interesting, and we can start to dive into some of those details.
Yeah, let's...
Right.
Okay, so there are these built-in safety features, like these buffers, but they don't completely eliminate risk.
Right.
So what does that mean for my potential gains?
Yeah.
If my losses are limited,
Yeah.
are my gains capped as well?
That's a really important point to understand, and it's where, it's really about finding that right balance
Okay.
for you as an investor, right?
Yeah.
So the trade-off for having that downside protection
Right.
is often that there will be some limitation
Okay.
on your potential upside as well.
So how do I know what that balance looks like for me?
Right.
Is it all about just saying, okay, well, I'm comfortable with this much risk, so I'm going to pick a buffer level and just hope for the best?
Not quite.
Okay.
Remember how we were talking about how VIAs
Yeah.
are very customizable?
Right.
This is where that customization
Okay.
really comes into play.
Got it. Yeah.
You can often actually choose
Okay.
what level of downside protection you want.
Okay.
And of course, that's going to influence then how much of that market upside
Right.
you can capture.
So it's a balancing act.
It is a balancing act. And this is where...
Yeah, and I'm guessing
Go ahead.
this is where working with a financial advisor
Yes.
who understands VIAs
Absolutely.
would be super valuable
Hugely valuable.
because they can help you navigate
Yeah.
all of those choices and figure out, okay,
Right.
based on, my risk tolerance and my
Right.
goals, what level of risk
Yeah.
and potential return makes sense.
Yeah. A good financial advisor can look at your entire financial picture,
Right.
not
Not just
just this one piece of the puzzle,
right.
but really get a sense of
Yeah.
what your overall goals are, your risk tolerance, and then help you kind of
Guide you.
towards those VIA options
Okay.
and features that really align with that.
So it's starting to sound like VIAs.
Yeah.
Aren't this like one-size-fits-all solution?
No.
It's really more like we need...
much more tailored.
Yeah, a tailored suit.
Exactly.
You know, we need the right fit
You got it.
to get the most out of it.
That's a great analogy.
Okay.
Now, beyond, the customization
Okay.
of, the risk and potential return.
Right.
There's another
Yeah.
layer to VIAs
Okay.
that can make them particularly appealing.
Okay, this is what I'm really curious about.
Okay.
What are the advantages of choosing a VIA
Yeah.
over, say, just investing in an index fund directly?
Yeah. That's where that annuity part of the name
Right.
really comes into play.
Okay.
VIAs come with some tax advantages
Okay.
that can be incredibly beneficial.
Taxes, you have my attention. Tell me more.
All right. So one of the biggest draws
Okay.
is what we call the tax-deferred growth potential
Okay.
within a VIA.
Okay.
So unlike...
So I'm not paying taxes every year.
You got it.
Okay.
So unlike a regular, taxable investment account
Right.
where you might owe taxes on your earnings each year.
Right. Every year.
With a VIA, those earnings are allowed to compound and grow.
Okay.
Tax-deferred.
Tax deferred.
You only pay taxes on those gains when you actually start withdrawing the money.
Okay.
Typically in retirement.
So it's like my money is getting a head start
That's a great way to put it.
because I'm not losing a chunk of it to taxes
Exactly.
every single year.
You're letting it grow
Okay.
without that drag of taxes.
That makes sense, especially if you're investing
Right.
for a really long-term goal like retirement.
Exactly. And that tax-deferred growth
Okay.
can really make a significant difference
Yeah, I bet.
over time.
Right.
So,
Yeah.
for example, let's just say
Okay.
you invest $100,000
All right.
in a VIA,
Got it.
and let's just say over 20 years.
Okay.
It earns an average annual return
Okay.
of 6%.
Got it.
Now, if you were to invest that same $100,000
Yeah.
in a taxable account,
Right.
and you got that same 6% return,
Mm-hmm.
you'd be paying taxes on those earnings every year.
Right.
And so
Yeah, so you're already at a disadvantage there.
you are. And
Yeah.
let's just,
Yeah.
assume,
Yeah.
for the sake of this example, a 20% tax rate on those earnings.
Okay.
After 20 years
Yeah.
in that taxable account,
Yeah.
you'd probably have about
Yeah.
$220,713 after taxes.
Okay.
But in the tax-deferred VIA,
Yeah.
you'd be closer to $320,713.
Wow.
That's almost a $100,000 difference.
That is a significant difference.
It's huge.
Okay, so this tax-deferred growth.
It's a big deal.
Yeah, it really highlights how valuable that
Yeah.
can be over time.
Absolutely. And, this is just one example, but it
Mhm.
really underscores how powerful that tax-deferred compounding can be.
Okay, so tax-deferred growth,
Yes.
big plus.
Big plus.
Are there other tax advantages that come along with these VIAs?
Well, while that tax-deferred growth is definitely a major draw,
Right.
it is essential to
Yeah,
consult with a tax professional
of course, right.
to really understand the specific tax implications
Right.
for your individual circumstance.
Yeah, because taxes are complicated.
They are very nuanced.
So you want to make sure you're
Yeah.
getting advice that is tailored to you.
Absolutely.
Okay, so we've covered the downside protection,
Mhm.
the customization,
Right.
and these tax benefits.
Yeah.
What else makes VIAs stand out?
Another aspect that can be very appealing,
Okay.
particularly as folks are
Yeah.
nearing retirement,
Okay.
is the potential to add what's called a guaranteed lifetime income rider.
Guaranteed lifetime income.
Yes.
That sounds almost too good to be true as well.
It does. It does.
Like, I can actually get a paycheck for life. Right.
From my VIA.
You're on the right track, but let's unpack that a little bit.
Okay.
Because it is a bit nuanced.
Okay.
Essentially, by adding a guaranteed lifetime income rider,
Okay.
you're basically creating a stream of income
Got it.
from your VIA that you cannot outlive.
Okay.
So it's a way to ensure that you have some income coming in.
So no matter how long I live.
No matter how long you live, that's right.
That's incredible.
It can be a really...
It really addresses that fear that a lot of people have
huge...
about outliving their savings.
Exactly. That fear of running out of money in retirement.
Right.
This is designed to address that.
Okay.
Now, it is important to note
Okay.
that adding this type of rider
Yeah.
usually does come at an additional cost.
Okay.
And it may limit the growth potential
Okay.
of your VIA a little bit.
Got it.
So it's always about,
So trade-offs to consider.
There's always trade-offs, right?
Like with any financial decision.
Exactly. But that potential to create that guaranteed stream of income, that's huge.
You can be a game changer for some folks.
Yeah, that peace of mind.
Absolutely.
So it seems like VIAs just offer so much
Yeah.
flexibility and customization.
They do. They're very flexible.
Yeah.
And that's why, it's so important to work with someone
Right.
who understands them.
To help you navigate all of that.
Because they can be very powerful.
Okay.
But
Yeah.
it's about making sure they're the right fit.
Got it. Okay, so we've established that VIAs aren't like a one-size-fits-all solution.
Right.
It's about tailoring them
Yeah.
to your specific needs and goals.
Exactly.
But who are these VIAs actually designed for?
Yeah.
Can you give me some real-world examples
Right.
of how people are using these?
Yeah, absolutely. So, one example might be
Yeah.
a business owner
Okay.
who's planning for retirement,
Okay.
but they also,
Right.
want to keep their funds accessible
Right, because you never know.
in case
It's
the business needs an infusion of capital.
Exactly.
Right.
You might need to tap into that.
So in that case,
Yeah.
a VIA
Okay.
with that potential for tax-deferred growth
Right.
and downside protection
Yeah.
could be a good fit,
Okay.
especially compared to something like a traditional qualified retirement plan
Yeah.
that might have
Stringer rules.
much stricter rules around withdrawals.
Right, exactly.
Right.
Okay, that's a great example.
Yeah.
It's not just about,
It's not just for retirees.
retirement planning.
Right.
It can be a strategic tool for business owners who
Absolutely.
are wearing all these different hats
Exactly.
with their finances.
Yep. And let's not forget about
Right.
younger investors too,
Okay.
right?
Yeah.
Imagine someone
Yeah.
in their 30s or 40s
Okay. Who?
just starting to think about retirement, who's maybe starting to think about retirement,
Yeah.
but they're also
Right.
concerned about
Yeah. Inflation is a big one these days.
inflation.
Yeah.
Huge.
Eating away at your savings.
Exactly.
Yeah.
So a VIA with its potential to outpace inflation
Right.
through that market-linked growth
Because you're
could be attractive.
right. You're hopefully growing at a rate that
Yeah.
is higher than inflation.
Exactly.
Okay.
So it's not just about
So you're not just protecting what you have.
protecting what you have,
Yeah.
but you're actually,
It's also about potentially
potentially growing it
growing it.
at a rate to outpace these rising costs.
Yes.
Okay.
That's a really good point.
Another scenario we could look at is
Okay.
legacy planning.
Okay.
So
So thinking about passing on wealth.
let's say you want to leave a portion of your wealth
Okay.
to a charity
Okay.
or a nonprofit
Got it.
that you really care about.
Okay.
A VIA can actually be structured
Okay.
to provide a death benefit
Okay.
to that beneficiary.
That named beneficiary.
Exactly.
Wow.
So it's a way to ensure
So your legacy lives on
that your legacy lives on
and continues to support
and that those causes
the causes you care about.
you care about are supported
Wow.
even after you're gone.
That's
Right.
That adds a whole other dimension.
Right. It's really
To
about
how VIAs can be used. It's not just about my own
your financial skills,
personal financial
it's for
security,
financial values,
but it's about
That's-
creating a lasting impact.
and your long-term goals.
Wow.
Well,
This has been incredibly insightful.
thank you.
I feel like
I appreciate that.
I've gained a whole new understanding
Yeah.
of how VIAs work
Well, that's what we're here for.
and the potential benefits they
Yeah.
offer.
It's always exciting to kind of,
Yeah.
demystify
Right.
these financial products.
Right.
And really empower people
Right.
to make these informed decisions.
Yeah, to take control of their financial future.
Exactly.
You've given our listeners a lot to consider today.
Yeah. There's a lot there.
As we kind of wrap up
Sure.
our deep dive into the world of VIAs,
Yeah.
what's the one key takeaway you want everyone to remember?
I think the biggest thing to remember is that
Right.
VIAs offer this really unique approach to investing.
Okay.
They combine that growth potential
Mm-hmm.
with that downside protection.
Right, that we talked about.
But you got to remember,
Okay.
they're not a one-size-fits-all solution.
Right.
It's all about,
Right, it's got to be the right fit.
it's got to be the right fit for you.
Right. Your individual circumstances.
Understanding your needs,
Yeah.
assessing your risk tolerance,
Mm-hmm.
and most importantly,
Okay.
consulting with a qualified financial advisor
Yes.
who can really guide you
Right.
toward the best choices for your situation.
Excellent advice.
Thank you.
If you're intrigued by the
Yes.
potential of VIAs
Yeah.
and want to explore further,
Right.
do your research.
Ask questions.
Ask questions.
Don't be afraid to Reach out to those experts.
Seek expert advice.
Exactly.
It's your financial future.
It is.
It's always a worthwhile investment.
Absolutely.
To take the time.
For sure.
To make these informed decisions.
I agree.
If you have any questions, feel free to contact Helen Hou, an experienced financial advisor and insurance specialist.
Yep.
She is available to assist.
That's right.
With all your financial needs.
Absolutely.
You can reach her at 408-909-5865.
Give her a call.
For more information.
There you go.